following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets, here off the daily interval, where I'd mentioned at the top of this entry point, call it 31,914 price resistance, where we had continuously constructed larger negative and bearish divergences that really were amongst all three key technical momentum indicators, with bearish crossovers there on the moving average convergence, with already right to the peak of that key inflection point, knocking that 28,869 price support, then down to my second target, 28,628 price support, really to the button there. And the entirety of that trade was good for a 9.87% crash there. And especially if you're an active and or a quick, more so active day trader, really to the button there. That was gauged in, and that was a nice clean buying opportunity right there for a 3.7% pop in a single day. Hitting right back to that key inflection point off that 29,869 price support. Also offering a nice clean objective day trade entry short trade setup there. That was good for a 3.3% pullback there. And we are really in no man's land, completely taking out the 50-day moving average there. And I believe we are reaching amongst a key pivotal inflection point. Whereas the 28,628 price support is heavily validated off that price support level there. Just now with that validated reactionary low, we have multiple reactionary highs, reactionary lows, right amongst the, call it a multi-month price support level there. Whereas you'll have the primary reactionary low trend line here hovering in down below. And I believe for that to be a very key inflection point off the December 2022 reactionary lows there, cuts right through the 2023 March crash there, and then the ultimate lows of the June 2023 lows as well. And I would only suspect some sort of potential bounce if and when we go to retest that target, retag it. Bull traders and or long traders need to defend that dual support really at all costs to re-challenge that 29,869 price resistance. And that is significant resistance now. Again, multi-month key inflection point. That is strong resistance now with pure validation off that rejected back test there. And that is a big moment to watch if we go on to retest it, which will coincide with the 50-day moving average as well. Ton of support right up above there. Short traders, bear traders, they want to see a complete validated breakdown, sell signal down below that 28 dual support level, issuing a strong daily red candle close below that inflection point with a potential back test, and then a re-challenging of this hidden. I've had it here for quite some time off the 11th of the November 2022 reactionary lows, and it cuts right through a ton of wicks of pretty hidden concealed inflection point, which will correlate with the 200-day moving average there. And then I would only suspect bull traders and or long traders to step in and set some bids to defend that key inflection point really at all costs there. And then again, another solidified breakdown below that key inflection point correlated with the 26,699 price support and the 200-day moving average. That is big support there too. And that would usher in just a potential bigger wave of selling, in my opinion, if we snap that key inflection point. So these are key levels to watch, and longer term daily interval process off of some key swing trading inflection points. And we'll zoom in now to the 240-minute interval. And this is what I see now. This is the update here. We have the color tan coded price support levels and resistance levels correlated with the daily interval there. And we are in a primary hidden channel as of now, where you'll have a pretty clean reactionary lows, reactionary highs right across the board there. And again, just a multitude of reactionary lows. So again, for any active and or quick day traders, you have the 628 price support here with the bottom of the channel here, where you have the 54-hour moving average with the 29,141 price resistance right up above this key inflection point. Plenty of reaction to validate that strength of that inflection point. What is very concerning is the negative concealed primary divergences amongst all three technical momentum indicators here, with their breakdown, with already breakdown sell signals below their zero line thresholds in the technical momentum indicator space. That is a key inflection point to watch. To have conflicting damage all across that realm there, and I would only suspect long traders to step in and avert this divergence and have a nice clean 4-hour breakout above that key inflection point resistance, and a re-challenging to the top of that primary channel to re-challenge it, correlated with the 29,869 daily price resistance up above, and the 29,000, call it 30,000 price resistance up above there. And they want to take that level out, have a solid 4-hour close up above, and issue a more strength of momentum and in a near-term rally to the upside, and avertedly just beginning to burn out those negative and bearish divergences to spur health back into these key momentum indicators above their zero line thresholds and challenging the negative concealed hidden divergence that was in place here amongst all three technical momentum indicators. So we'll see what happens. I'll keep you updated if I see any more significant price action here on the chart. These are your key levels to watch. If you want to watch how I successfully timed the short trade setup in this 9% darn near double-digit crash off that key resistance level, honing into that second target, and then ultimately playing the day scalp bounce to the upside for 3%, watch the video, the left corner of the screen at the end of this video.